All right, we got some news coming out today. Go over to Forex Factory here. Consumer sentiment, inflation expectations. Okay, they're listed as orange, which is middle of the road important. Red, of course, but this is Canada. Looks like we got good news in Canada. As long as these numbers here in the actual are green, that is good. Green for good, red for bad, just to keep it super simple. Let's go over to gold. The gold trade is working out really nicely. And let me show you why gold is working out. I think I've discovered a way, discovered, right? I see a pattern here, all right, and this is going into strategy development, okay? Do you see on the 1 hour chart? 1 hour chart here, the 50 simple moving average has crossed above the 89. This is the 89 simple moving average. This green line here is the 50. Got some trend cloud signals firing off um, as well. And the 50 has crossed above the 89. That goes into our gold strategy that we are developing. And you can see, look, 86% accurate. Drawdown 26, not too bad, but works very well, right? This I believe this is buy and hold here. So it is below buy and hold. But as far as a trading strategy goes, very high profit factor, 86% accurate. What that's telling us is that when the 50 crosses above the 89, if you take a buy order on gold, it's very profitable until the 50 crosses back below the 89. So that Fibonacci moving average, right? 89 is a Fibonacci number. That 89 simple moving average is quite substantial. It is quite valuable to incorporate that into your gold strategy. So what did I do? And I closed out of the trade, but you look for the crossover. Look for that crossover on gold, okay? And that will give you the determination of which way this is going to break out. So it broke out to the downside right into a demand zone. Let me open this up. Okay, here's the first demand zone on the 15-minute, or this is the 5 minute. The first demand zone on that 15-minute chart that comes right after the crossover. So again, 50 crosses above the 89, and this is the first demand zone that it comes into. And what did it do? Pulls into that demand zone, which initially breakout was to the downside. So with gold, it breaks to the downside and then breaks to the upside. And yet, it does this fake out, and it was really frustrating all of us. And I noticed this pattern here. 50 simple moving average crosses above the 89 simple moving average. That crossover there, okay? And there you go, 86%. So you can see it's taking the long right here, pulls back into that demand. Now I don't, let's see how this goes. There's a lot of back and forth that takes place before the 50 finally breaks back below the 89. So we're still working on that. But look at how nicely it worked. You could have taken gold is expensive, so if you jump on the micro, you can take the breakout of this, or you can take the bear trap, right? Pulls down, breaks through. So this is a retest of the opening range. Retest of the opening range here. Here's the demand zone down here. Wow. And gold looks like it's, this is the problem with gold, right? It is just so, a lot of whipsaw, a lot of whipsaw. All right. It's 9:30. We've got a downward move on everything. Um, S&P, wow. Oh my gosh, this thing's ripping to the downside already, like off out of the gate. Very strong readings to the downside here. I believe we are slightly extended still. Yeah, extended on the 5-minute chart on everything. The Dow, micro Dow, the Russell, everything's extended on the 5-minute chart, just ripping to the downside. And we said we want to look for premium setups and fixate the directional variable, right? We want to say, hey, you know what? Let's let the NASDAQ and the ES, let all of these things do whatever it's going to do to the downside. If it's going to go down, let it go down. Let it go down because this is what really is messing us up. Right here, daily chart. Oh, that's daily chart on the Russell. Okay, we're about to recalculate on the daily. That's what this has been. That's been screwing us up, guys. We had such a great month. Um, we had such a great month until October. October was really tough for me. Um, I really took a hit in October because this extended trend, massive extended trend on the daily chart, went to the ninth wave. And what would it do? It would pull back and then it would go back up, pull back and rip to the upside, rip to the upside, rip to the downside. It was trying to recalculate on the daily chart and it really threw the market into a lot of chop. And I think that's great to know. If you see that the daily chart on these futures indexes are extended, right? If all of these are extended on the daily chart, let's see what the NASDAQ got a little bit more ways to go. A little bit more ways to go. S&P is recalculating. The Dow is about to hit the 50 on that daily chart. Okay. Look at this. Look at this craziness. You want to try to trade that? Like, man, I don't know. That's we don't usually get a lot out of that unless you jump the gun, right? You see this thing starting to move fast, you jump the gun and you're in and out um off of your anxiety, right? Look at this thing just ripping to the downside here. Let it let it rip to the downside and go bonkers back and forth all over the place. Look for the premium setups on the upward moves. We did beautifully like that. We did so well just doing that. And we made a couple of nice moves on the shorts. Like yesterday we did great with the short. And the retest, right, of platinum. But the really big moves are to the upside. So this thing, it looks like this is going to recalculate. It could either hit the 50 simple moving average on the 3-hour chart, I mean on the daily chart, and bounce off of that. But we really want this thing to break below and recalculate. All right, let's go out to the 15 and watch what this thing does. Go back to the S&P. All right, we're recalculating here. But this has to close. Is this going to close below the 50? Or is it just going to stretch down here and then recover? In which case, we're going to have more downward movement. But the market sentiment is to the downside here because it wants to recalculate. Um, let's open up the daily. Let's try to find some high time frame demand zone. I mean, this is just a market edge. Let's mark off the market edge. Um, that's pretty far down, isn't it? We can do like that. There's your market edge in this area here. It's a zone, right? It's a zone. From here, the low, yeah, low to high. Let's put in Fibonacci, retracement, swing low to swing high. All right. And look what we've got here. It's pulling down into a 618. It's got to close there. We've got to stay down here until 4 o'clock. Maybe we wait for this to hit a 786 retracement level, and then we jump over to the 5-minute chart and we start looking for reversal patterns. And that's a great technique. Go out to that high time frame demand zone, mark it off as best you can, what you feel like here's the low, here's a higher low, here's a retest, right? Mark off that. Put Fibonacci, 786, 886, right in the middle. It has to hit one of these levels, and then you jump over to the 5-minute chart. Okay. Jump over to the 5-minute chart. It's got a ways to go. Where's ADR? Let's go out to 3-hour. It's just hitting ADR now. Okay. Good. It hasn't even formed the opening range yet. We are super early in the opening range. And this thing's just ripping to the downside. Good. Let it. Let it rip to the downside. I am ecstatic about this because we've been waiting for this stupid thing to recalculate on the opening range. I mean, to recalculate on the daily chart because it has really been chopping us up. It wanted to recalculate so badly on the daily chart. All the upward moves were very short lived. It's like we want to go up because the economy is great and we're making deals all over the world and there's peace in the Middle East, and then the wave factor. You can't ignore the wave factor, right? That Elliott wave component is very important. And on the daily chart, man, this thing just really wanted to recalculate badly. It said, "Hey man, enough is enough. I need to fill the car up with gas," right? Those blue candles represent a low gas tank. You're driving along the highway, gas light goes on. Hey, we've got to pull into the gas station here, fill up the car. And, it's got to close below the 50 simple moving average to recalculate. All right, so it's doing that today on the S&P. Hallelujah. I think we're going to have a really profitable month now. November, my birthday month. See that? This is the month of the Scorpio. So I think we're going to have a really good month. Let it do whatever the heck it's going to do. Great. finally recalculating. I hope it comes down here and we hit one of these levels, um, and then you can try to take a chance on that 5 minute. I mean, this is going to have to go all the way if it is going to come all the way down here. We don't know how far down this is going to go, but at this point, what are you going to do? You're going to chase this thing. The opening range isn't even formed yet, and we've already blasted into the ADR checkpoint down here. This is always our final target for the day. Remember, we're day trading, right? We're not swing trading or position trading. Top Step doesn't let us, right? They don't let us day trade or swing trade. No problem. We're going to adjust our strategy so that we're going to adjust our strategy to make it preferable for day trading. Go out to the 3 hour. Now let's just read everything. Okay. 3 hour chart, downtrend, strong downtrend, right? Negative 146 on CCI, cycling down, plowing into the 618 retracement level on the daily chart, right? So 3 hour, the context of this 3 hour chart, very strong to the downside. How about the 1 hour chart? Beautiful. Early in the trend, pulls back into TrendCloud right here, forms that second wave, nice TrendCloud signal to the downside. Negative 196, 198 now. Negative 190, 198 on the CCI. Huge, huge to the huge move. If we were up here, and the opening range was forming, that'd be a different story. We would love to take that short. 15-minute chart, same thing, right? Pulls back, forms the second wave, and just rips to the downside, hitting that ADR checkpoint. See how the 618 Fibonacci uh, retracement level is kind of clustered around the ADR? That's what you want to look for. You want to look for stuff like this. See previous day's close and the 50%, right? That's called ratio confluence. Pattern recognition and ratio confluence, right? Whenever you see these lines start to double up or cluster together, pay attention to that. And, for us to go short on this now would be rather dangerous, We've already hit ADR for the day. And it's got to hang out around here. Maybe by tonight, right? It pulls back and just sort of grinds slower to the downside, little by little. Almost looks like it's going sideways, but down. We want it to recalculate. And of course, if it finds support and people get excited and they start buying this, you're buying it against momentum and trend, right? So let's say you wanted to buy this thing because it already hit ADR, and somewhere in your analysis, you're saying, oh, yeah, this is a good buying opportunity, which I don't know why you would say that, but maybe you're only going off of one thing, right? Where would your target be if you're doing a counter trend move, right? If you're doing a counter trend move and you're saying, hey, I'm gonna buy this thing when it breaks above here. So it breaks above here. Your first target on the 15-minute chart is right in the middle, right? Kind of right in the middle of your trend cloud, right? Right where this green line is. previous day's low. So you'd have to be careful. You'd have to say, okay, well, if I break out to the upside, and here it is, here's the opening range now. Breaks out to the upside. Here's my first target, previous day's low. Maybe that gives me a retest. Second target is going to be the 50 simple on the 15-minute chart, which is also in line with the 50% retracement. And then if you look over in the middle chart, it's the very bottom part of your 1 hour trend cloud. So you have to work backwards. If you're going long, counter trend and counter to downward momentum, you've got to look at those higher time frames for targets, right? So this would definitely be a resistance level right here. And you'd have to make that judgment call. Like, is it really worth taking a trade from here to here when your stop loss has to be all the way down here below the opening range? Not the best, right? It's your thought process that you've got to get a handle on rather than, oh, wow, I'm going to buy this thing and just let it go as far as it's going to go. Well, you definitely want to let your winners run, right? You want to let your winners run, but can we scale out of this? What if I'm in 5 micro contracts and I say, all right, I'm going to take 2 off right here and then take another 2 off right here and, then let this thing run to the ADR high. Because the context of all 3 of these charts, when you're using 3 hour, 1 hour, and 15-minute together, you've got more of an edge to the downside, don't you? More of an edge to the downside. The fact that it hit the very first ADR checkpoint, um, that's just one piece of information, and we're using that as a target, right, for our downward move. So yeah, and you would do that in reverse. Like if you took this short, where's the next target? ADR right here. Is that in line with anything else? Let's open it up. Here's ADR. Where's my line? Right here. Okay. Look left. Structure leaves clues, right? We have to go way, way out. Go out to the 30. Okay. Still going. Structure. Okay. Drop base rally. Right in here. See how we did that? Nice and clean. Logical. All right. So on the 30-minute chart, we've got a nice drop base rally right here at the second ADR. Now, that's pretty interesting. That's how you would pick your targets in the direction of momentum and trend. And when you want to pick your targets against momentum and trend, you've got to do the same thing. And when you have TrendCloud on your chart, it really puts it there for you already, right? It's very clean. It puts all those lines in there for you. We've got ADR. If we went counter trend here, we've got a resistance level here, previous day's low, 50% retracement that we drew on the daily chart. 3 hour chart, look at how the 50% is, it's a 50% retracement level. It's the very bottom part of the 3 hour trend cloud. You've got this right here. So just drawing out structure is super important because we need to take those areas into consideration as targets, right? Look at how ADR checkpoint is just above that supply zone that we just drew out here. You can refine it even more on the 1 hour chart, I see, like that. Now you've got a supply zone right in the middle of your 1 hour trend cloud. These are all logical supply and demand zones and structure to take as targets, right? So you would take the supply zone as a target if you were counter trend, right? If you were doing a counter trend move, and you would take the demand zone as a target with the trend and momentum. Where is that in reference on the daily chart here? Nice, it's right below, right? Again, we have to hang out below the 50 simple moving average until 4 o'clock. It's a long ways. It's a long time. Um, and I think we're going to see very slow movement from now on. See how slow everything got? It was like, oh my God, this thing is ripping to the downside. What is going on? And then all of a sudden it stopped. Rapid movement. We've been getting very rapid, a lot of very rapid movement right around 9 o'clock. Right around 9 o'clock. But I think we're going to see much smoother and cleaner premium setups to the upside now that the daily chart is recalculating as of right now. Hopefully it stays down there and closes below the 50 on this daily chart so that it recalculates. We need this thing to recalculate. It's been it's been beating me up. It's been beating me up. And I think that has really thrown a monkey wrench into our strategy, which means you've got to filter even more because you don't, and these are all lessons that I've learned along the way. I get bored when I have to filter out for an entire week. Maybe a whole week goes by. It's like, man, we didn't really have a clean setup. And then by the following week, it's like, oh my God, let me try this. And there's that pattern drift that I was telling you guys about. We tend to drift through our patterns and strategies. Oh, that's not working. Let's try something else. That's fine if you've got data on each one of those strategies. You know, again, using your knowledge, using everything that you've learned is not the same as using a strategy, right? Using your knowledge of day trading without data is called guessing because you really don't know. That was the big problem, I think, with Online Trading Academy. We learned about supply and demand zones. We learned what a strong supply and demand zone looked like, right? Oh, drop base rally, one candle, big, huge move out. That's knowledge, right? That is knowledge. Yeah, yeah. Seth says 100%. That's knowledge. But where is the data that shows the win rate, the profit factor? You would have to program that on a 15-minute chart and look at the data. Then you'd have to look at the data from the 1 hour demand zones, the 15-minute demand zones. They're going to be different. How are you drawing the supply and demand zones? Is there only one basing candle? The data is going to be completely different. Drop base rally with one basing candle on the 1 hour chart you're going to have to run data on that. Then you'd have to run the same test on the 15-minute chart. Drop base rally, one basing candle, 15-minute chart. I wouldn't even know how to program that. You want to do that by hand? Oh my gosh. I don't know who has the time to do that. That's the big problem. So, when I saw that you could program the opening range in the strategy tester, on TradingView, was like, holy cow, here's 5 years of data like this. So it's very programmable, and I think that's why you see it a lot on YouTube and Top Step, right? They like to use it. But those guys at Top Step, I don't think they tested anything though. The guys that go live, they really they go by gut feeling, man. Yikes. They go by gut feeling, and they're only looking at the two candles. They'll look at this candle, and then they'll look at the candle that's forming right now, and they're basing kind of everything on that. And when it doesn't go their way, they're like, "What the heck?" At least when a trade doesn't go our way, we know what the heck is going on, right? Like we've got everything here to the downside, right? All of this, right? 3 hour downtrend, 1 hour downtrend, CCI below negative 100, cycling down. Like breakout should go to the downside, man. And we've tested it. If it rips to the upside, we know exactly that this is weird. Right off the bat, we're like, huh, momentum to the downside across multiple time frames, 1 hour and 3 hour. Trend to the downside across multiple time frames, 1 hour and 3 hour. Breaking out to the upside. Something's weird here. At least we know that much, you know, because back in the day when you didn't have it tested, you would have said, oh, I was wrong. Thought it was breaking out to the downside. Oh, this must be a trend reversal. Go long. And you end up in a bull trap, right? So if this breaks to the upside, we're going to say to ourselves, oh, okay, possible bull trap. First, that's what we say first, right? Breaking out to the upside. Wait a minute. Negative 185 CCI, negative 137 CCI, downtrend, downtrend, early in the trend, right? It's only second wave. It's forming the third wave, but yeah, we got one more pullback here. Bull trap, right? Pulls back up. And we look for shallow traps, right? Just like if this broke to the downside and retested, you want to see a shallow retest. Gets real scary when it pulls all the way back up to here and then, you know, this starts to continue in the direction that you want. But looking at momentum and trend has really been a winner. Take the trade if you're gonna guess, at something. If you're gonna use your knowledge and experience, make sure you use your knowledge and experience in the direction of momentum and trend. I think you'll be much happier. I know I am. So just with that little bit of structure, you're really able to call the shots much better. And look how we're almost at 10 o'clock and this thing hasn't broken out yet. Rapid move to the downside. Looks like the floor just dropped out from under this thing. Rapid movement to the downside. Hits that ADR checkpoint, and then all of a sudden, just kind of calms down, right? The marathon runner has, you know, hit hit their peak. They hit their usual amount of distance that they run every day. Every day, this person gets up, goes for a run, and it's usually right to here. Um, Fridays are normally slow anyway. Yeah. Fridays kind of end sooner too. kind of ends sooner, much sooner. So this will be good. This thing will recalculate on the daily chart. Hopefully it stays down there and doesn't do anything. It just stays below that 50 on the daily chart, recalculates. I think we're going to have a really solid November, but this has got to recalculate. Let's take a look. We're on the S&P. What's the NASDAQ doing? Same thing, same thing. And daily chart, look at that. Daily chart is just hitting the 50. So we're getting that little bit of a bounce. Look at how the 15-minute, the ADR checkpoint, right? ADR checkpoint is right in line with the daily 50 simple moving average. You got to start putting those pieces together. What is the relevance of ADR checkpoint structurally on multiple time frames? Is there any? And that's what you want to look for. Again, ratio confluence, right? Look at how they kind of stack. ADR checkpoint, 15-minute chart. Let's let's put a line and see where it goes on the 1 hour. We'll move it back. 1 hour chart. Ooh, well. A little bit of a market edge, right? We've got this drop base rally, one basing candle right here. Let's draw it out. Okay. Make it green. Interesting, right? Okay. Remember, it's a zone, right? And it goes all the way to here, right? Drop base rally doesn't really do anything, right? Then it just goes sideways, creeps up. This one's a bit stronger. Drop base rally breaks through that 89. I'm always putting the 89 on the 1 hour chart now. Take a look at the 89 moving average. It really holds, right? There's a bit of significance there, right? It's kind of we use the 50 simple moving average as the line in the sand for uptrend or downtrend, right? We are in an uptrend on the 1 hour chart here. Becomes extended, breaks below, recalculates, and kind of sticks to that 89, right? Look at here. Look at how it pulls back to the 89, pulls back to the 89. So it's like your first line in the sand is the 50 simple, and then that 89 simple moving average is like the final last straw, right? The Alamo, right? The Alamo moving average there. Just interesting, right? I like playing around with those Fibonacci numbers. 89 is a Fibonacci number. So very, very interesting stuff. To us, it's interesting, right? To other people, they're like, what the hell is wrong with you? What are you talking about? Um, yeah. Okay, so we're entering that area. Let's see. Hitting that 50, getting that bounce. Good. Hallelujah. Let it recalculate. Let it do whatever it's going to do. Still hasn't broken out on the NASDAQ to the downside. And we know why. I love being able to understand possibly why this thing is slowing down, right? It's not ripping through all of this. It's coming down, it's hitting, it's bouncing off. We know why. We know why. Because we use ADR checkpoints. We use this Elliott wave component here. We use multiple time frames, right? We look at the daily chart. I never see anybody, um, I never see those guys at Top Step looking at multiple time frames. They always seem to have just the one. It must be very difficult, and they have to keep it interesting. They got to keep it kind of, they got to keep it kind of exciting. But this is definitely the way to go. So again, using your knowledge is great. Don't be misled though. And at the very beginning of your day trading journey, you're like, oh man, I can't wait to have, 5 or 10 years of knowledge. I'm just going to study the market. You can study the market for 30 years. It will not equate to consistent profits. And Mark Douglas does talk about this. 30 years, if you're chasing knowledge, it's not going to equate to consistent profits. Only back tested strategies equate to consistent profits. Okay. Rip into the downside, and we know why. We need to recalculate. We are with the trend, we are with momentum, right? Momentum and trend to the downside, breaking out to the downside, totally understandable. Maybe we hit that second ADR checkpoint, very possible on the NASDAQ. And now the NASDAQ needs to hang out and recalculate. Please, for the love of God, recalculate already. Let's see. The Dow, the Dow is not extended on the daily chart, right? But it's probably going to do the same thing. In fact, it's early in a new trend on the daily. So the Dow, maybe the Dow just bounces off the 50. I hate it when it does this, right? Look at that. It just slightly breaks to the upside and then hangs out in the middle. That is really stressful. But we wouldn't be taking this long anyway. Essentially, this is a bull trap, right? Very strong readings, right? Strong readings. 3 hour chart on the Dow, negative 128, negative 126 on the 1 hour. Downtrend, downtrend. A bearish candle forms the opening range, right? And it just peaks to the upside inside of that 15-minute trend cloud. Nice little, that's the kind of bull trap that you want to look for, right? Trend cloud signal to the downside. May take some time. Hasn't hit ADR yet. I'd be pretty confident that the Dow hits this ADR. How about the Russell? What is the Russell doing? Russell got itself into a bull trap situation. Very bullish candle formed the opening range, pulled right back into that 15-minute trend cloud. Little stronger than the Dow to the downside on CCI, 136, negative 136, negative 137. Pretty much the same. 3 hour, 1 hour CCI, downtrend, downtrend. Momentum and trend to the downside. If you're going to take a chance, take the chance in the direction of momentum and trend, especially when you're early, right? So again, you can study technical analysis and day trading 20 years, 30 years. Oh my God, I'm going to be so consistent with 30 years of knowledge. It does not equate to consistent profits. Knowledge and experience or I should say, knowledge of technical analysis, learning about technical analysis, and does not equate to consistent profits. Only if you put that time into a well-developed, back-tested strategy that you can objectively program and look at 5 years of data, right? Oh, when 3 hour and 1 hour CCI are below, negative 100, and you're in a downtrend and it breaks out to the downside. Oh, 70% accuracy. Okay. This is breaking out to the upside. Got a little bull trap going on. Well, I'll take a chance on that. So the most profitable and the highest win rate is when CCI on the 3 hour and 1 hour are, breaking below negative 100 and then hover below the zero line, right? That's premium. Price action is below the 50 simple on the 1 hour chart, right? Those are the three components. It's very simple, right? And if it does, in fact, break to the downside, because you have the data, you've got the numbers. 70%, right? 68 to 70% around there. Hey, that's fantastic. If it does anything else, breaks out to the upside, that's weird. Probably now you're going down, right? In win rate. I don't have an exact number. So it's a little bit of a guess, right? A little bit of a gamble when you take a trap. So you can either leave it alone, and it's in that document that I sent you guys, right? The levels of premium setups. This thing breaks out in the opposite direction of momentum and trend. Let it go. Leave it alone. Or, take the trap. Jump, go over to the micro, go over to the micro account, take the bull trap. That's a great strategy. But if it breaks out in the direction of momentum and trend on a premium setup, definitely use the full contract. Use the full contract. You have to. You have to use the full contract because 70%. Why would you not? You know, get risk free. You have to be right within, $500 to $1,000. But at 70% win rate, man, I take that bet. And I usually do. Oh, the Leap is back on, guys. If you want to jump into the Leap day trading competition, it starts November 10th, right on my birthday. So jump in there, see what you can do. If you're at the Maria, maybe Maria, you want to jump in there, test out your skills. Doesn't cost anything. It's totally free, and you'll see where you're at. We did it a bunch of times as a group. Um, and now we're kind of focused on Top Step and combines and express funded accounts, and that's cool, you know. So I won't have time to do both, but I've done it 4 times already, and the last time placed in the top 7%. That's some street cred right there, man. So give it a whirl, check it out. Doesn't cost anything. It won't hurt you. You'll be nervous at first when you get in there, but definitely do it. Put your knowledge to the test. Use the strategy, and it's a really good proving ground. Every day compete in the Leap day trading competition using that TrendCloud opening range strategy and see where you place. I guarantee you'll place, around 10 or 11%. And that is going to give you confidence to do it live. So, all right, it's about 10:14. It's usually when we call it, right? People start going to work. I'm gonna take some creatine, drink some water, go to the gym, and we're gonna do some legs and do some legs today. You got it. Have a great weekend, everybody. Eddie, have a great weekend. Seth, Sarah, I will see you guys on Monday. Take care, everybody.